The S&P 500 rallied 1% today. You had the Nasdaq 100 up another 2%. And Jay Powell really had a great opportunity to push back on some of this market euphoria that's taken place over the past month in the stock market, but he didn't. In fact, he went out of his way to really accommodate the doves in the market, the bulls, and to provide language that made people feel like that, hey, we're going to be getting some interest rate cuts here before year end. I don't know necessarily if we'll get those, but man, the market is really thinking that, and he had that opportunity to push back on that notion today, and he didn't. In fact, he kept saying the word disinflation must have been like 1,000,000 times during his presser. And so now the market is breaking out. We've got a lot of bullish developments in the wake of extremely overbought market conditions. So what I want to do in this video is I want to go ahead and go over the market conditions here. I want to look at the S&P 500 and the Nasdaq 100 and really see what we're looking at on the SPY and the Qs. But first, before I do that, make sure to click the join button down below so you can get more market videos like this each and every day where I provide my watch list. I'm also providing a lot of additional information, including big market updates and updates on the broader market when I'm not doing these videos. Plus, you're going to get a whole bunch of different trade ideas each and every day. So check that out. It's really a good value. So let's go ahead and look at the S&P 500 here. So these are my markings that I've been really paying close attention to over the past, I would say, couple of months here. Obviously, this yellow trend line going downward, we've broken out of that to the upside, but you got this white line here. This white line is a huge layer of resistance. That's really where the market breakdown started to take place back in May of last year. Yes, we had declined significantly up until that point, but in terms of breaking a major support level, this white line was where it happened at. And we've tested it on multiple occasions trying to break through it, and only one time have we been able to do it, and that was that July-August rally. But now look what we've done today. We've broken back above it. You had the sell-off on Monday. It looked like a bit of a fake out, a shakeout of the longs, and it did a pretty good job of doing that. And then the last 2 days, it's just been ripping higher. End of month saw incredible amounts of buying, especially at the end of the day. And now with the FOMC statement out of the way, we're rallying back above this critical layer of resistance, making it support again. Now, if we did pull back, I would want to watch this rising trend line off of the October lows, but we hardly can even get a down day, and with the FOMC statement probably being one of the biggest risk events for this market going forward, it's now out of the way as well. Now, on Thursday, you have Apple, you have Amazon, you have Google reporting earnings. Yes, there could be some significant letdown there if they all disappoint, or if even one or two of them disappoint. But from what we're seeing with a lot of these stocks right now, it's like all news, whether it's good or bad, it's getting bought. So you're seeing that with Meta today. They missed out on earnings per share. They're rallying 18% after hours. So I'm not really buying the fact that the market really wants to sell off for any reason at this point. The only thing going for the bears at this point is we are epically overbought. I mean, this is the T2108 I highlighted a lot. It's the percentage of stocks trading above their 40-day moving average. We're at 80%. We're at 81 or 82%, 81% at one point today. That's at the same level of the August peak when we rallied really hard, about 20% in the Nasdaq. And you can see this is a lot higher than we have been in years. So it would take going back to the beginning of or mid 2020, but that we were overbought this much here back in June of 2020. So we got that going for us too. We were even more overbought than we were in August during that epic rally. So SPY, the other thing I would note too is you had this lower high and then you had this higher low, and then finally one of these two had to break, right? Either the lower high had to break or the higher low had to break. Well, we ended up breaking through this higher low, so we're trading above that now. That's a big move for the market and creates really not a lot of obstacles going forward to push back on price. Maybe there's a news event or something else that happens, but in terms of technicals, there's not a lot standing in its way right now. Going to the Qs, even more so. You got the double bottom action, right? I mean, some people will say that's a triple bottom right there, but I just make it a double bottom anyways. This had yet to confirm, really. We tried to confirm it on Friday. We closed a little bit above it, but we gave it back on Monday. That's why it was starting to look like a little bit of a head fake for the market. But look what it did today. It recaptured it, and more so. I mean, we are blowing past it, confirming the double bottom. Now, is it too late to get into the market if it's going to go right back up to all-time highs? Absolutely not. I mean, we're still about 25% off of the highs of all time. So there's still plenty of room for it to climb. But this is a pretty good base that is formed. Now, am I necessarily uber bullish on this market right now? Not really. I have to follow where price is taking us, and so far, the price is doing nothing but going higher. Will there be a reckoning at some point where the market will have to calm down a little bit? Yeah, I mean, it always does. There will be a pullback of some kind, but you can see when we come off of some of these bases, sometimes it goes a lot higher and a lot further than you would have ever expected. And you're starting to see that same exuberance that you saw like in March in 2020, back in 2018 right here. When we hit those lows, it's just unfettered buying. And it's not so much that you have like heavy amounts of buying, it's just nonstop buying, and there's no sellers that exist. So when there's no sellers, it's just going to go consistently higher, even if it's on no volume. Looking at the VIX, guys, this thing is breaking down as well. I mean, it's breaking below a key support level. This declining trend line doesn't really want to seem to give up any ground here. And you can see now where price is breaking back below it again for the second time. Can it get that follow through? I mean, we're at 1787 right now. We're in the teens. Now, anything between like 12 and under 20 is considered actually a very low volatility bullish market. And the fact that we're trading at 17, considering what we've just come out of, is quite astounding. Now, we hit pretty low numbers back in August. We went into like the 19s, high 18s, and then we ended up topping there. But we're even breaking below that at this point in time. Let's look at IWM, because I haven't talked about that one in a while. But look at this. Support level here. It's never broken its June lows. So it held it back in September, held it again in October. And then you had this line right here, this layer of resistance that created a breakout opportunity. Well, guess what? Yesterday it broke above it, and it has been rallying ever since. Yesterday's rally was strong. Today's rally was just as strong. So big basing pattern right there actually created a higher low as well. Really well put together there. The point of all this, not necessarily that we can't have another major pullback, but right now the bulls have full control of this market. They have not really stumbled at any juncture over the past couple of months. They continue to do very well. There's a CPI report later this month that could end up being a stumbling block for the market, especially if it comes in really hot. But as of right now, unless the Google, Amazon, Apple earnings fall apart on us, which, look at AMD, look at Meta. Those stocks have had pretty bad earnings. They've had misses, and yet the stock rallies. So maybe they'll throw in some layoffs, or maybe they'll do a stock buyback, and it'll cause their shares to rally regardless of how bad their quarterly performance was. So you have all these things working against the bears right now. They're losing all the technical levels of resistance, the downtrends, the higher, the lower highs. They're breaking through that. They're creating new trend lines. And so it's really difficult at this point in time to remain a bear. And you have to really go where the chart's taking you. Again, I'm kind of nervous about the overbought nature of this market. I think it's pretty extreme. I think it's severe. And I think that getting long here does carry some risks to it, that you could be getting in closer to a short-term top than you are near a short-term bottom. So you got to keep that in mind, that you want to continue to manage the risk regardless of how rosy the outlook looks or how uber bullish traders seem to be. You can't stop doing your job of managing the risk. If you enjoyed this video, I'd encourage you to like and subscribe. Hit that bell button down below so that you can be notified of any future videos. Let me know down in the comments below, were you taken by surprise by the Fed's dovishness today? I was quite surprised. I thought we were going to get that Jackson Hole J to come out, but he didn't. He stayed in the cave, and he basically squandered a good opportunity to bring some realistic expectations back to this market. So let me know what you guys think down in the comments below. Thank you guys, and God bless.